Addison Wiggin is a writer, a publisher, and a filmmaker. He's the host of the Wiggin Sessions. It's a show covering the financial markets, economy, and politics. And he's the host and editor of Essential Investor. The third edition of Demise of the Dollar is available now, and third edition of the Financial Reckoning Day will be coming out middle of October. Welcome, Addison.
Yeah, good. Great to be here. Thank you.
Yeah, excited to have you on the show. Tell us a little bit about your personal life, some more about your work, why you do what you do.
Yeah, I have been most of my adult life, I've been fascinated by financial markets, and I've been writing about. I have a sort of a central question that I ask whenever I start getting interested in the topic, and it's kind of a gloomy one, but I ask, what could go wrong? There's many things that go on in the financial markets that don't make a lot of sense. The obvious ones are where we have a blooming, skyrocketing financial national debt. We're at over 33 trillion. When I first started getting concerned about the national debt, it was 2.9 trillion. So I've been following the just crazy politics that go behind that kind of spending and borrowing and spending and spending and borrowing for 2.5 decades, and the pattern with which the government is run and the way they spend money is unsustainable, but it has gone on way longer than I expected. Another area that I focus on is just the value of your money. The book Demise of the Dollar is sort of a historical look at what happens when governments try to manage fiat currencies like what we have. And a fiat currency is basically a currency that has value by decree of the government. So they go hand in hand. The government is spending way more money than they take in tax receipts. And then the only way they can make up that deficit on an annual basis and the national debt is by printing more money. And every time they print money, the purchasing power of the dollar goes down. Since 1971, when the dollar was taken off the gold standard, or the Bretton Woods exchange rate system, as it was known, the dollar has lost 98% of its value. And the past couple of years, we've gone through a couple-year bout with historic inflation. And just really quickly, following the financial crisis of 2008, the government dropped interest rates to zero and printed tons of money by buying assets directly in the market. It's a program called quantitative easing. And so for 10 years, we had all this money flowing into the market. And finally, after the pandemic, it reared its head as massive inflation. And that's really the only time that people begin to pay attention. So I've been pretty busy on podcasts and my own show talking about the impact of inflation on people's ability to buy stuff that they need. Just basics: houses, cars, tuition, food, gas. Everything has gone up, and for the first time in these past couple of years, people are wondering why. So a lot of the historical work that I've been doing in my own writing and in the books I published trace what could go wrong when the government is as profligated as it is, and people have to spend the money that they print. We're all in the kind of same boat. Money loses value, and then everything costs more, and it's not an easy situation for a lot of people.
So looking back at 2.9 trillion, you're like, what's going on here? We're sounding the alarm. This is a huge problem. And
Yeah.
now 33 trillion.
Yes.
So
it's kind of crazy.
You talk about how it's not sustainable, but it's sustained for this long. Have we finally come to the end of the rope, figuratively?
Well, most recently, I've identified three things that I think are happening that could potentially make 2024 a very interesting year in the financial markets, in the economy in general, and obviously we have a presidential election coming up. So one thing has happened. We're talking about sustainability. How long can this go on? Well, the fact is that it can go on for a very long time until something pricks the bubble. We're in what we would historically call a major debt bubble. People have been able to finance their stuff for a very long time at low interest rates, but now in the attempt to battle inflation, we're going into an extended period of rising interest rates. And that's going to be very difficult for people who have loaded up on debt. And at the national, corporate, and personal debt levels, we're reaching historic highs. Obviously, national debt is every day it goes to a new high because we've never been this high before. But corporate debt is at an all high in 2023. Just the first half of 2023, we had more corporate bankruptcies than the prior 10 years since the 2008 financial crisis. And that trend continues. And then at a personal level, this is a kind of an astounding fact. During the pandemic, a lot of money was shipped directly to consumers from the government, the stimulation in response to the pandemic lockdowns. And for the most part, people couldn't go anywhere, they couldn't spend it. So we had a high savings rate. We had near historic high savings rate. But all that money has already been spent, and people are turning to their credit cards to keep up their spending in a rising interest rate era. So what we have now is we have historic high consumer debt levels and a savings rate that's below zero now. So we, in the 2 years since 2021, personal debt has skyrocketed to historic levels, and savings rate has plunged to historic levels. So that happened in a very short amount of time post-pandemic. And we're starting to see the effect of that in two ways. One is big retail companies depend on middle-class shoppers to make their budgets. And we're already seeing same-store sales in places like Walmart and Target and big box stores, even like hardware stores like Home Depot, are showing that the consumer is getting tapped out. And so that's part of the sustainability factor, is how long can consumers sustain this borrowing to spend in a rising interest rate era. That's one factor I'm keeping an eye on. And I expect we're going to see a lot more corporate bankruptcies in 2024 because consumers won't be able to keep up their spending except on debt loads that are experiencing rising interest rates. The second thing that I think no one is prepared for, I've been talking about this mostly because I'm fascinated by it, but we, for nearly 4 decades, we have been outsourcing our jobs and manufacturing to countries overseas, but most notably China. China built out their infrastructure by taking on projects from US corporations and European corporations that were seeking cheap labor, cheap resources, and cheap transportation. Well, we're entering what I call an era of the end of cheap, because in order to finance all of the outgrowth for infrastructure and for factory building and these ghost cities that we hear about in China, they have financed all that on their own debt bubble. And for the first time, we're seeing their growth rate has dropped from an 8% annual rate for a long period of time, which is extremely fast growth. We've seen China leapfrog other countries to become the second largest economy in the world. But that now their growth rate has slowed to, it's probably going to be around 2% in 2023. And across all strata of their society, we're seeing debt rearing its head. They basically are in their own aggressive debt bubble in the same way the United States is, but their financial infrastructure is less sophisticated. Their banking system is not regulated as well. And they have a strange method of buying up companies in rural areas. The government itself buys up companies in rural areas and makes them take on debt in order to build out roads and factories. And those companies that are effectively forced to do that by the government are finding that they can't make enough revenue to pay back their own debt. And the government tries to help them, but the only way that they can get out of it is the same way the United States is trying to do it, is spending more money that the government prints. And so we have an issue where the Chinese government has been forcing the growth of the economy, and that's coming to an end because they're not able to finance the debt loads that they've taken on. So it's kind of an interesting story. People ask me, well, why should I care what's going on in China? And the fact is, we've been dependent on China for a very long time for the cheap stuff that we buy in the same big box stores that I just mentioned are already having trouble meeting their own books. So we have, at the same time that we have a slowdown in consumer consumption, we're also have the end of the era of cheap is coming along, and it's going to make it very difficult for big companies that you find on Wall Street to make ends meet, and that forces a condition I call a balance sheet recession. There's a lot of talk about, will we go into recession because of the measures the Fed is taking to reduce or to get control of inflation. But the real danger, in my opinion, is balance sheet recessions on Wall Street, on these big companies that are showing losses, and they have to figure out how to manage those losses before they report earnings. If they do report earnings, bad earnings like Target and Dick's Sporting Goods, Walmart, they've all reported less same-store earnings than in previous years, and they immediately get their stock gets sold off. So the impact of the balance sheet recessions that we're expecting to see is that you have more strain on the stock market. The stock market has already been riding high on things like artificial intelligence that carried the market for most of this year. And it's not being replaced by the general strength of retail companies, which generally make up a big part of the strength of the stock market. So I expect we're also, in addition to a slowdown in consumer spending, I expect the stock market is going to begin to fall too. And when that happens, then people really start getting nervous because they're so dependent on their 401ks, IRAs, and those kinds of things. Their pensions, they're all wrapped up in these big blue chip companies. So I expect 2024 is going to be an interesting year in the economy and an interesting year in the stock market. And when you have these things converging, you have what we've seen more and more violence in things, protests that get out of hand, random mass shootings. They have not only captured the attention of the media, but they're happening with a greater frequency. And that generally happens. The last time we had anything like this was in the 60s and 70s, when there was just general disruption in the economy, and people are stressed because of their financial situation. They tend to do really stupid things. They take to the streets more often. We see strikes all over the place. We're at the highest level of striking workers since the 1970s right now. You can see just on the surface, you can see the economic stress and tension starting to appear in a way that it makes it difficult for the mainstream media to keep up the narrative that the economy is strong. And that's the third thing that I think is going to be a challenge in 2024 is we have the presidential election. Generally, presidents who preside over a failing economy or a slowing economy don't do well in the election, but this is going to be a different year because we have Biden, who's getting on in age. We have Trump, who's getting on in age. We have these sort of leaders of the two parties that have a mindset of the old world. We're not taking into account the wave of enthusiasm of young people to put younger representatives in Congress or in the White House. And there's a huge divide politically, not just between left and right, but between the old and the young. And that's going to make the election for presidency next year, it's going to make it much more unpredictable than we've seen in the past, especially where we have a rising level of economic uncertainty, economic stress. And, young people are willing to take to the streets just for any reason. We have mass demonstrations saying end oil, end fossil fuels, as if you can just flip a switch and turn off the economy and start with a new energy. It's just not possible. But there's millions of young people that are taught that that's what we need to do. It has to happen quickly, and they're willing to shut down the economy in their area, just to prove that point. I think it's going to make a very fractured and difficult series of primaries, and then when we go into the election itself, I think you're going to see a lot more protests, a lot more random violence in society. Those are not nice things to think about, but with all these trends in place, consumer spending, the end of cheap, and a political divide that we're going through, if you do ask the question, what could go wrong? There's a lot that could go wrong, and that's really what I try to focus on a daily basis, is try to figure out what's going to happen next. It's very difficult when there's so much uncertainty as there is right now.
Advice to individuals, families who are listening.
Yeah, I would say, I mean, I have specific advice because we also publish financial advice for people that are trying to manage their own money. So one of the things that I'm telling people now is don't really look at the headlines, just recognize that these trends are in place. And I would stay away from any of the blue chip retail stores, because I think they're going to have a tough year next year. And because the stock market has been higher than I think it's valued at, or that its true intrinsic value is, any indication that big pension funds or big mutual funds have that there's going to be weakness in the retail sector, I think it's going to go down faster than it's really warranted, because people are stressed in the financial markets too, and they're wondering when the next shoe is going to drop, so to speak. And so generally when that happens, when a sell-off begins, it's more aggressive than it needs to be. It surpasses the point where they're valued at a good place again. So I do believe we're going to have a pretty serious balance sheet recession. But then when the sell-off begins in Wall Street, especially the retail sector, and anything that has exposure to China, excuse me, is going to have a really difficult year, and the tendency is going to be to oversell. So we could see a pretty dramatic pullback in the market next year. So that's one thing I recommend to our readers, is make sure that if you're using a financial advisor, or if you're even just trying to manage your own money, make sure that you tell your advisor or keep in mind that stocks do go down, and we're about to enter a pretty tough period for big blue chip stocks, which will get headlines and cause this kind of like echo chamber of people thinking that things are getting worse and they'll sell off faster. So that's one thing. Another thing is to look at areas of the market where they're immune to market crashes and also a slower economy. And that's the two sectors I like are energy and commodities, and precious metals too. I think gold always performs well when we have uncertainty in the stock market and the economy. In the last couple of years, it's sustained a level around 2000 for about a 3-year period now. So even if the stock market goes down, putting your money in gold is a good idea. And then looking at the basic stuff that we need to run our economy. Energy is going to be important. And I think even though there's a social movement against fossil fuels, I think things like natural gas and oil are going to continue to rise in necessity, therefore value, therefore prices too. So in an era where the economy slows down, the dollar gets weaker, then generally commodities, things that we need to make stuff, and energy do really well. So I actually just released a special report on that idea that we're going to have balance sheet recession and a growth in investing in energy and in raw materials. And I think that is going to be the story for 2024. The biggest unknown is going to be the political situation. I think as soon as January 15th, which is the first primary, it's the Iowa caucuses, I think we're going to start seeing a lot of uncertainty in the political arena. There's already questioning about whether Biden should run again because of his age. So over the weekend, I was watching the financial news, and something like 78% of all Americans, not just Democrats, think that Biden is too old to run again. Except when the talking heads, when the politicians get on TV, they say, "Well, we're all behind Biden. We think he's the right pick." So there's some uncertainty there. And then the when the indictments against Trump play out, he and most of the people that are supporting him believe that they're politically motivated. But it's still a process of law. Probably the most dangerous one there is in Georgia. They can't get it moved to the federal system. So state law in Georgia is at play for, I think, something like 18 of Trump and his the people that he was working with they've been indicted and are accused of trying to overturn the election in Georgia, violating state law. And a lot of those indictments come, if they're convicted, come with jail terms. So I think that also is going. There's no way to predict what's going to happen, especially when those trials begin, and they're happening right during the primary season. So the recipe is in place to have a very difficult political year, and that's just going to raise havoc with the markets and the economy. Also, you got three big trends that are happening at the same time that I expect 2024 to be one of the most historical years of this era, this post-pandemic era.
Addison, what could go wrong?
Yeah, what could go wrong? It's kind of a fun question if you approach it right.
It is a useful
But a
thought
lot of people,
exercise for
like
sure.
I asked that question, and a lot of people are like, why, what's wrong with you? Why are you this way? I had one woman just get in my face at one of our launch parties, actually, for a book about 10 years ago. And she's like, "What's wrong with you? Why are you this way?" And she was really mad at me because I was trying to understand literally what could go wrong in the economy. But my idea is, if you ask that question first, then you can see sort of like the base level of protection you need for your own money. If you have earned enough money to worry about it, then you should be asking the question, what could go wrong, and then preparing accordingly at a base level. And then if you have, if you want to take a flyer on cryptos or something like that, then as long as you have answered the question, what could go wrong for the rest of your money, then speculation in AI stocks, for example, they've been flying off the shelves this year. Just this new wave of interest in artificial intelligence has been driving chip makers through the roof, and a lot of people mistake that for a healthy stock market, but it's really just a small bubble in one sector of the economy that's holding the entire market up. So I think it's important to ask the question, what could go wrong? Try to answer those questions, and then manage your money accordingly.
Well said. Well, Addison, thank you so much for coming on. Where can people learn more about you? How can they engage? Where can they get their copy of Demise of the Dollar, as well as
yeah. Oh, sorry about that. Financial Reckoning Day too. Financial Reckoning Day is not out yet. I just finished the edits on that. It's in publisher land. They're getting ready to print it, and it'll be released in the third week of October. But Demise of the Dollar, which is really an understanding of how purchasing power is falling apart and has been for a number of decades, and what you should do about managing your own money as that trend continues. Every crisis that the government faces, they solve it by printing more money. They don't really have any other way to solve economic crises other than printing more money. And every time they do that, you lose more purchasing power. So if you want to understand how that works and how it has worked specifically with respect to the US dollar, that's why I wrote the book, because it's a historical look of how we got in this situation, and then forecasts of what can happen in the future. That's called Demise of the Dollar. You can get that anywhere books are sold. And on my own website, you can go to wigginsessions.com. And I also write what I call the Daily Missive, which is just kind of a look at the markets. And I'm also trying to answer the question, what went wrong in that writing as well. It's a daily email. It's usually about a page, page and a half long, not too difficult reading. You can get that by going to jointhesessions.com. So www.jointhesessions.com. And then you can pick up my interviews with my own guests on my show, plus the writing that I do to support those interviews.
Excellent. Well, if you enjoyed this as much as I did, show Addison your appreciation and share today's show with a friend who also appreciates good ideas. Go to Wiggin Sessions, Wiggin Sessions.com, and also join the sessions.com and sign up for that daily missive that Addison puts out. And then get your copy of The Demise of the Dollar as well, so you can better prepare yourself for what could go wrong. Thanks again, Addison.
All right. Thank you.
Until next time, remember, do your part by doing your best.